Welcome to TheNBI.com. This is John. This report is for the 4th of January. Well, not much of a surprise. We started briefly below the ABM yellow yesterday and then continued to close towards the highs at the end of the day. As I was talking, we were dipping from having just gotten to that 4,800, but just below it, that the market would have to recover that, or that would cause a lot of people to freak out a bit. And clear enough, they understood that exact message and made sure that they pushed right back up to it. Magenta above yellow and above the 33, so no issues at all from that standpoint. Likewise for the YM, so pretty consistent from a reading standpoint, all suggesting to push higher. And it's part of the narrative where there's been a lot of concern about the market topping out. As long as that talk is going on, probably not the top, because everyone's always looking for it. When they're looking for it, that allows the counter trade to do exactly what it's doing, which is continuing to push. Now it's when shorts finally give up and say this is never going to end, because the Fed actually is not tightening despite what you heard. So more of the same is what I would expect at this particular stage until we see readings that suggest otherwise, and we're not seeing them from the big players as yet, so they're not finished with their move. From a euro standpoint, nothing going on there. It's going to be the case. The pullback in gold, again, that's going to be a reflection of this back and forth debate as to whether or not inflation is going to ramp up or stall. The reality is it's more likely to increase, but that doesn't necessarily always correlate to gold having to rise. A lot of plays in between there with governments and that. And anytime you get governments involved, you stop having a free market kind of discovery, sort of like what we're experiencing in these last decades since the Fed sort of took over the markets. From a USO standpoint, oil, though, international, and that one's a much tougher case to get a grip on. And if this continues to light up, then I think there'll be no choice. The Fed's going to be squeezed again and have to look for some version. And that's what the market's really looking for. They're looking for the anticipation of another set of stimulus, more money to be thrown out and about. Cryptocurrency starting off the year, soft, below some of the key thresholds here. I think 48 for the Bitcoin is a relatively important marker, as well as the 4K for Ethereum. And both still dramatically below it, and even with their gap ups, they all filled those gaps as expected, positive extremes, even prior to it. And faded back nicely. I mean, the signals are super clean with that, no complaints at all. Sort of flatlining here. We did go back to the zero move on the 50K after the NBI weight spike. So, but the thing about that is it's on rising 0%, and the range is becoming so tight that when that range becomes, once the breakout begins, it should be fairly significant. So, people think getting up towards that 4,800 would be a thing, but at the end of the day, actually, it would probably lead to pretty quick move towards 49 and potentially even 5K. So keep that one in mind. And from an intraday standpoint, it started off good. We ended up with a few really clean sell signals that responded beautifully. And then you had this kind of muck where it's sort of like going back and forth, and it's like, okay, it could be a short, but then again turning around to be a long, and then going back again. But once it forms the spikes and then resets with the weight moving below the 10 level, that's where you have to really then look at it from the clarity standpoint and say, okay, now do I have a Magenta rising above NBI yellow here, in which case, yes, it was. And then I look for the beginning of the pivot of the blue, and once you get that, that's usually the signal. So it's like beginning here, you have a couple of bars to like realize that gotta find any weakness to get out of the short position if I'm still in from the major dip, because you're going to get a pop going into there. And then we ended up with a couple little sell signals that worked out fine, and then as the day grew on, we just kept getting a little bit stronger P2 readings. So it's a P2 pivot from DSC, meaning red DSC moving higher, and then we kept getting the spikes of orange moving lower under red and that started off the run. And once that run began, it pretty much ended the day flat to that. And then you can see in post-market doing the exact same thing. Add another positive extreme. In fact, I'll go ahead and just do it right here and now. So we've got them starting from this candle right up here. And that would be our first retrace level, around that 47.85 range. But this close, we should go over 48. And if it goes over 48, you would expect to head towards 48, 22, 23. And then we would make a pullback evaluation from there. But this definitely has to top 48 at this particular point. Otherwise, that would be catastrophic. So that's the long and short of it. As always, though, trade well. We'll talk to you later.